in live today. Today's topic is how to pitch to investors. And we are going to talk to a guest speaker. His name is Jerry Hykins. He will be joining in shortly. When he tried to log into Riverside FM, it gave him an error message that, you have to download something. So he's in the middle of doing that. He'll be joining us shortly. So, thank you so much for joining this LinkedIn Live event. We do it quite frequently on various subjects: how to get funded on your startup, what are the vehicles which are available to you to get funding, as well as what is a good pitch deck looks like, and so many other topics. How to hire your team member for your startup. Very startup focused LinkedIn Live events. We do talk about startup digital, that how and what to do in your digital marketing, as well as startup accounting, that how to prepare to get funding. But today's topic is how to pitch to investors. So one thing that I will start with, you have to be uh, you know you have to know your pitch. The passion need to come out. It cannot be that you are running up pitch deck and you are just reading from it. It should come from your heart. Use the pitch deck or the PowerPoint presentation that you have for talking points, but tell a story. Build a story around your startup. Those are the things that investor is looking for. The investor is not looking for technical terminology or how good the technology is. They are interested in business, what the business is all about, how big is the market, what type of traction you have done so far, and how you are going to utilize the money, how you are going to raise that money, if you have any commitments, and how this investment is going to help you in growing this business. So it is all about taking the money, growing the money, returning the money to the investor. If they can understand this, you have a winning pitch deck, or your pitch is successful, and then they will take you to a deep dive call, a due diligence call, and a term sheet negotiation, and finally the investment will be coming to you. I would like to also field some questions if the questions are coming in. But in the meantime, I'll keep talking till the time Jerry Hykins, who is the co-founder and managing partner of Innovate Capital, joins me in here. I have known Jerry for over 6-7 years now. We are part of a group called TIE, TIE. TIE just opened its newest chapter in Patna, in Bihar, in India. It is the 62nd chapter. We have presence in 13 countries. We are all, the charter members are accredited investors all around the world, 3,000 plus investor group. We are doing some great stuff. It is all about coaching these startups and, mentoring these startups. We have our programs and all those, but, we'll cover TIE later in one of these, LinkedIn Live events. The pitch to investors. So, obviously you have to have your pitch ready. There are three types of pitch deck that you should have at any given point of time. One is the email pitch deck. So think of a scenario where, you have to email the pitch to an investor group or an individual investor, or you are uploading to a deal flow platform. So that is a different pitch. So welcome, Jerry. Thanks for joining in. I know you were having some technical difficulties. If you could just lower the camera a little so that we can see
Yeah,
your face.
I'm new to this app. I didn't realize I made an assumption. Apologies to everybody. That this was just a regular Zoom. So I'm winging it here.
Yeah. No, looks good now.
I had to switch devices, so I'm not on my straightforward camera. And
This is good. Your picture is a little pixelated, but it's okay. That will work because people are here. The audience is here to listen to you, and obviously we are recording this, and we'll be publishing it also world over. So Jerry, please go ahead and introduce yourself. Till the time you came in, I was talking to them a little about pitch deck. I was telling today's topic, as you know, is how to pitch to investors. So any pitching starts with a PowerPoint presentation. So, we will talk about that. But go ahead and, please introduce yourself, Jerry.
Okay. Hey, good morning, good evening, wherever you're at in the world. My name's Jerry Hykins. I am currently executive director of TIE SoCal, which is one of 62 chapters of TIE Global. TIE is, for those unfamiliar, is the world's largest entrepreneurial nonprofit. We support entrepreneurs through mentorship, educational events, networking events, and angel investing. Here at TIE SoCal, we have had 2 funds to support startup founders. We currently have a small women's fund that invests in women founders. And then I am a co-founder and managing partner of a emerging venture capital firm called Innovate Capital. And excited, we're going to be focused on investing in what we call overlooked and underestimated founders. Specifically, are coming from diverse backgrounds and diverse communities. And I guess maybe I should add a little more. Ansham, I don't know what he wants, how much info he wants, but I've been here in the Los Angeles area for going on 6 years now. It's hard to believe how quickly time flies. But when I moved out here, I entrenched myself in the startup investor ecosystem and attended just about every networking, investor, technology, startup event I could attend up until COVID hit, and built a tremendous amount of relationships. I've sourced deal flow for TIE SoCal, for Vidosh, which is a small venture capital firm, and having overseen as executive director TIE SoCal and TIE SoCal Angels, and now with the Emerging Fund, I've seen it all. I've seen hundreds and hundreds of pitch decks, and have mentored and given advice to numerous startups, and especially when it comes to pitching and decks and speaking to investors, even how to connect with investors, proper etiquette and all of that, because startups aren't taught how to connect with investors, and that's such an important thing to know and learn how to do.
Yeah. Thank you so much, Jerry. So thanks for your introduction. So as today's topic is how to pitch to investor, let's start with that, understanding the goal. What investors are looking for in a pitch deck?
Well, for one, the first thing is simplicity, I would say. You want to have a simple, clear a pitch deck. You want to tell a story and have a flow. A pitch deck, as far as I'm concerned, should always start with just a simple page. This is who we are, whether it's the name, whether it's the tagline, where the founder can simply share a quick story of their why. And to me, and again, I need to caveat this with everything's subjective. You're going to talk to probably hundreds of investors on your fundraising journeys as startups, and everyone's going to have maybe a slightly different perspective, but I don't think you're going to find any investor that's going to tell you they want a complicated and too much information on a pitch deck. If anybody's ever looked at Airbnb's pitch deck that they used when they went out and raised their first round, you can't get more simplistic than that. Simple graphics, simple lines, and very little text, graphics displaying the story, telling the story. And it makes it so much easier for the investor to see and get than to read through a bunch of text, a bunch of graphs and charts. Graphs and charts are fine if they're simple, but I've seen pitch decks that have the full financial spreadsheet on them, and you never want to do that. You want to give the basics in your initial pitch deck. Here's what our revenue is, here's what our expenses are over the next 5-year period, whatever it might be, and keeping it very simple. Just case in point, 2 weeks ago, I was at a LA Venture Network and Korean Consulate biotech pitch event. And the last founder to pitch, the first slide on the deck had a full long paragraph of text, and this actually was the business development person from the company, not the founder, but he proceeded to read every word off of that slide and from that paragraph. And I turned to the person, the investor next to me, and I said, never, never, ever read all the words in the slide. And they were kind of nodding and smiling and agreeing. The next slide, same thing. There were 3 slides in a row with all text, and they read verbatim every word. So it's just not the best usage of your time when you're pitching. So really keeping things simple, minimal text, graphically showing what your go-to-market strategy is, what the problem is, what the solution is, what your business model, revenue model is. All of that should be simple graphics with very little text. And then you tell the story. You fill in that text, because an investor doesn't want to read a bunch of text on a screen. You fill in that text by what you're verbally, communicating with the investor.
Yeah, absolutely. What do you think about, I always take 3 pitch deck with me. One is the executive pitch deck, which is a 30,000 feet view of the business. One is the email pitch deck that we email to investor or upload it on various deal flow platform like, Start Steroid. And then the third one is the pitching pitch deck, which I'll be using when I'm pitching to an investor. Have you seen anything else, Jerry, out there that you should be ready with?
No, I think that pretty much covers it. It all depends on how much time you have and what the individual's looking for. You're going to have a very simple, quick, clean deck to cover things simply and quickly, whether it's a 3-minute to 5-minute pitch, and then, typically like a 10-minute pitch, which even your 10-minute pitch deck should only be 10 to 12 slides, really. You want to keep it simple, and then you're going to have your more detailed, longer deck that if an investor says, hey, email me your deck, you can have one that goes into a little more detail. Now, that being said, when I say more detail, it still should be less verbose text-wise and still graphically. I can't stress enough to incorporate graphics as much as possible and minimize text, even if you're going to send out a full 20-page, deeper pitch deck for the investors to look at when they're wanting to look at more detail. But initially, I would say always keep it to that 10 to 12 page deck tops to share the basic information. You just need to portray what you're doing, do it well, and the investor will ask for more information. You just can't leave out the key components, though. So no matter how short your deck is, you always have to want to make sure that you cover the problem, solution, your go-to-market strategy, your go-to-market business revenue model, traction, your ask, usage of funds. I mean, you want to cover those basic things, because if you don't, the investor is going to be asking for you, and they're going to be annoyed if you don't have it in your deck, because any startup should know that these are the basic things. And yet I will have people send me decks all the time that are missing things. It's like, where's your revenue page? Where's your traction? Where's your revenue model? So no matter how much we try to coach and how much advice that startups are getting from various sources, it's rare that I find a deck that is missing. I mean, that doesn't have. It's rare I find a deck that has everything really that they're supposed to have, and those are the nuggets. But yeah, you should be prepared. You should always have like 3 different versions: a short, medium, and longer deck, for depending on the situation and scenario. And there are times you're going to be asked to give a 1-minute pitch, and I've seen it happen plenty of times. I've seen companies get funded or get interest just based off of a 1-minute pitch, and you can actually get everything in a 1-minute pitch. A former boss of mine was an artist at, he would listen to a startup do a 1-minute pitch and then redo it himself in the way that it should be done, and just masterful at including the story, all of the components within 1 minute. And it can be done, takes some practice, but the elevator pitch probably is the most important pitch for a startup, because you want to have that in your back pocket no matter where you're at. If you're at an event, and this is maybe not off topic, but if you're at an event and an investor asks you, what you're up to, what you're doing, always bring out a 1 minute pitch and nothing longer than that. Nothing. Don't stand there and rattle on for 5 minutes to investor when you're first having a initial conversation with them about what you're doing. Do a very concise 1 minute pitch or less and get their interest. And if you can't get their interest, you drop it and let the conversation go wherever else it needs to go.
So, the key takeaway for the audience today is that, you have to have a problem slide. You have to have a solution slide.
Yes.
You have to have a market opportunity slide. You have to have the business model and one slide for your traction, team, financial, and the ask. Is that this
Yes.
is the model that, I gathered from you, Jerry?
Yes, yes. And if I can say also, Anshuman, a problem and solution, one of the biggest challenges and one of the biggest things that I see startups do, they spend way too much time on the problem. If it is a problem worth addressing, and investors get it, you don't have to go into a whole 3 minute diatribe on what the problem is and 3-4 slides showing what the problem is. If it's a big enough problem or easy enough problem to recognize, which hopefully it is, it shouldn't take much to share what that problem is.
Mm-hmm.
And we see too much time being spent on the problem and solution, which are important. You need to share that, but then it's at the cost of not being able to spend time on the business revenue, the business model side of it. And every investor I know wants to hear more about how you're going to do it in the business and revenue model side of it than the actual problem and solution.
Okay, great. What is the role of storytelling in a pitch delivery when somebody is pitching? And let's run a scenario that, it is a 5-minute pitch or a 10-minute pitch.
Well, yeah.
The founder should be a storyteller, or he is very factual?
Well, you can tell the story and be factual both. I'm going to say storytelling is most important. You have to tell a story that engages somebody and make it interesting. And for me, and this is me personally, the why is one of the most important things to me, is why a startup is doing what they're doing. Why are you addressing this problem? Why are you putting time and energy and want my capital in order to do that? And your why and motivation of doing it is critical as far as I'm concerned. And again, you don't have to spend a ton of time with that, but it's a simple, hey, my mother passed from cancer last year, and I saw that, how it was very tragic for everyone involved. And because of that, there's a big problem within XYZ, within whether it's a cancer product or a social platform but I mean, your why can be just a quick 15-second why, but telling that story, the masterful pitchers are the ones that can tell the story. They can go from slide to slide smoothly, telling the story, having passion. I always tell people, I said, you never memorize a pitch. You never read a pitch. Never, ever have notes or read a pitch when you're pitching to an investor, because it tells them that you can't speak from the heart about what you're doing. If it's your startup, your passion, your baby, you should be able to just talk about it and go through that pitch with anybody at any time. And you should know all the facts, and that's where the facts are important, but you should know the numbers. You should know everything so that you can smoothly just share the story. And quick story, an example of that, one of the first events I attended when I moved here was called the City Summit. It was a 3-day business seminar, and I actually emceed and hosted the pitch competition. It wasn't a competition, but the pitching each day. And for that, Kevin Harrington was one of our special investors that attended and all that. But I remember the first day of pitching, the second startup, I even remember which one it was. It was the second startup to pitch, got done. And when I took the mic out to the investors, the first investor reached out and grabbed the mic really aggressively from my hand. And he looked up and he said, if you want us to get excited about what you're doing, the least you can do is get excited yourself. Because it was a very monotone, very factual, it was really a boring blah presentation. And it is so right. That's why I say you have to speak from the heart. You're a founder. you're doing this from a reason. It has to come from inside, and that's why the why kind of usually is what drives that passion. So you have to speak from the heart, and that's all part of storytelling, is being real, being personable, and sharing it. Because if you memorize your pitch and try to memorize verbatim, which gets into the very factual side of things, if you forget something, I see it happen all the time. You forget something, and Anshuman, you've seen it. You get all flustered, and you have to go back or do whatever it might be. And if a slide doesn't work right, or doesn't change right, or come up right, all of a sudden, and the masterful pitchers can keep going. Doesn't matter. It doesn't matter if the slides aren't working, whatever. You keep smoothly telling your story because you know it. It comes from inside. So I would say storytelling is absolutely key. But again, not leaving out the facts, but again, you can tell the facts through storytelling.
Yeah, we cannot, express this more, that you need to know your startup. You can start from anywhere to anywhere. Remember, Jerry, Irvine Tech Week, SoCal Startup Day, Startup Game Changer events, some of the founder, and these are paid events. People are paying to come and pitch. And then they say, oh, this is not my latest pitch deck.
Yeah. Well, why haven't you got us here? Yeah.
And there are investors sitting in the room. And if you tell them that, this is not my latest pitch deck, think of it, why the investor is now going to be interested even while you're pitching.
Sure. They want to see the latest.
If it is not your latest pitch deck, that's okay. But, this is the pitch deck that you have to go with.
Yeah. And yeah, it's better not to say anything and just pitch. And then as questions are being asked in further conversation, get there. You just need to get that interest for further conversation. So I wouldn't even say that, but yeah, we've seen it many times where the deck comes up. Well, that's the deck you shared, or that's the deck that, and so don't point out the faults. I would say you just keep going.
Yeah. So there are a couple of questions coming in. So, let's take some questions. We have about seven minutes left in this LinkedIn Live event. How can entrepreneurs convey urgency and convince investor to act quickly? My 2 cents on that is, don't do that. If you put pressure on investor, they will just say that, hey, get invested through somewhere else. What is your experience have been, Jerry?
I say you can't. There's nothing you can do to get investors to act quickly. They're going to act on their own time, and most investors don't want to act quickly. You have your whole due diligence process you want to go through, but investors don't want to jump into things, and I think I'm going to go back to another thing I heard from an investor is like, if you want us to invest in your company, do something that gets our attention. If you want an investor to act quickly, then show us revenue growth, or show us good traction, show us things that you're getting done. Not, you can have the most grandest idea in the world, and you've got a great beta, and you've got, some people piloting and all of that. But if you don't have traction, if you don't have some sort of revenue, if you don't have something that an investor can get excited about outside of just, hey, this is a pretty cool idea, you seem like a good person, but to get an investor to get active more quickly is to show them revenue, or show them very solid traction with LOIs, MOUs, solid customer base, whatever that might be. But yeah, you don't want to push investor. You can't get an investor to act quickly. I mean, it's just, unless you're doing something that they see that they're going, when you pitch to them, they go, oh my God, we need to jump on this because look at everything they're doing. And if you don't portray that in your pitch, then that's not going to happen.
Yeah, that, or, if you are in a space, or if you are lucky enough to have built your startup where you have already oversubscribed, then you can put the pressure that, hey, I need buyer to come in today. Otherwise, I'll have to go to somebody else because, they are waiting.
Very true. We saw that with John Vitti 5.5 years ago when Sergey from Google came in to close out his round the day that he pitched to TIE SoCal that evening. And he said, hey, sorry, I don't even know if I can take any more investors because I just basically closed the round. And he had 5 people, I believe, that evening that were clamoring to write him out checks. So yeah, there is that scenario. Yes.
Three more questions. How do entrepreneurs handle questions about competition in a crowded market during a pitch? My answer to that, Savvy, is that it is good that you are in a crowded market. That says that whatever you are trying to build has a market potential. So just use the crowded market, data to portray that you are in a market where needs are out there, and you can really build it a large company out of your solution that you are bringing to that crowded market space. So if you could convey that story, then the investor would like to learn more, may line up behind you to do that. Jerry, what is your thought?
Yeah, I agree. And on the competitive analysis slide, in that case, if it's a very crowded market, and there's some markets that are more so crowded and some that are less so crowded, but I would suggest in that case using, and I'm not a fan of any of the competitive analysis layouts, but the quadrant method I think is probably easiest to display that, because you can put a bunch of icons in each of the 4 quadrants, and then that what makes you unique in that upper right hand quadrant, where you're going to want to isolate yourself a little more. You can put more competitors and cover that, but you also want to cover, are those competitors newer in the space, are they larger, have they been around the space for a while? The main thing is, if you're in a larger competitive market, you need to really hone in on what makes you unique. What are you doing that's different? What are you doing that's exciting? And I don't mean spending a ton of time on it, but articulating it and displaying it well. What makes you different from that crowded market space?
Yeah. There's a question from Priyanka. What are the key numbers investors expect to see in a pitch? My short answer to that would be certainly your growth numbers, your revenue. If you have a SaaS business model, then your SaaS and projected numbers. What are your thoughts, Jerry, on this?
Yeah, I mean, numbers that you definitely want to see: TAM, SAM, and SOM. We want to see what the market, what the market is. And again, the event I was at 2 weeks ago, I mean, literally out of the 8 pitches, only one of them understood what TAM, and these were, foreign startups for the most part, but none of them understood what TAM, SAM, and SOM were. And they were putting it up on the slide though. So that's important. And then the projected revenue, that gets left off so much. Even if you're not in revenue, we want to see what your expectations are. And usage of funds are another important thing. What's your raise and what are you using those funds for? We want to see the breakdown. It could be a simple pie chart breakdown of that. But the revenue, if you don't have revenue, then the numbers are, okay, who's your customer user base or your beta users or whatever it might be? How many customers have you piloted? How many customers non-paying that are using your platform? And then if that's the case, what type of research and numbers do you have on converting those? Because if you have 150 users saying using your platform, you haven't started charging yet, you need to show an investor, okay, we have survey polled all 150 users, and 130 of them said that they're going to pay moving forward once we move to a pay model. So those numbers are critical if you don't have revenue and you're at that point where you're going into revenue.
Yeah, great. Aditya is asking a very good question. What are the key red flags investors look for that can sink a pitch? Red flags in a pitch deck.
There's so many. Lacking any of the things that we've mentioned, but a key red flag is really having numbers and then lacking numbers and not being able to explain the lack of numbers. Red flags are not even knowing what your usage of funds is. The pitch 2 weeks ago, I keep going back to that event 2 weeks ago. One founder was asked what their usage of the funds was, and he couldn't answer. He said he'd have to talk to one of his other team members. And that's a huge red flag. If you're the one pitching, if you're CEO, and the only one who should be pitching for a company, let me stress, should be the CEO. It doesn't matter. You got to learn how to be, the CEO needs to know everything, but you need to know all your numbers And the red flag is not knowing numbers, not knowing how to answer questions. That's the biggest thing.
Yeah, Aditya, the numbers are very, very important. I have been to pitches where, the numbers are listed on the in the pitch deck, but when an investor is asking, okay, what is the percentage growth quarter over quarter, and
Yeah.
you go blank. You need to know those numbers, those maths very, very quickly. We are already out of time, but there are two important questions that I would like to think.
Sure.
Niban says, how can you make cold emailing to investors interesting and compelling for them to go through business detail in a pitch deck? My short answer to that, Niban, is that, we'll be doing an event on that, and Jerry is an expert on that. So, I'll request Jerry to attend that sometime in October. That how to write a cold email. Yesterday I was at Chapman. I am an entrepreneur in residence over there. I guide startup founders, and I was talking to Cynthia West. She said they have a course on 90-word email. 90-word email. And she was telling me that, even, and I write like, hi, Jerry. She said that, you don't have to write, hi, Jerry. It should be Jerry, comma. And then, so I'm going to get a PDF from her, and, I'll be posting it on LinkedIn with her permission, as well as the other group. But, Jerry, real quick, cold emailing to investor, making it interesting.
You don't want me to answer that question, because I'm not an expert on that, because I advise startups not to send cold emails with decks, because 99% of them aren't going to open it up. If you don't have a warm intro to an investor, cold emails do not work. They simply do not work. And that's from 99% of the investors I talk to won't tell me that they won't open them. You need to have some kind of warm. Now, Anshuman may disagree, but I am not a, in my course on how to connect with investors, I say, do not send cold emails. That's not the way you connect with investors.
Yeah. So Jerry, what I wanted to hear from you, and you were spot on. Cold email is not a great way to do. Yeah, you have to send email. You send email, but build the relationship with the investor. Connect with them on LinkedIn. Send them one message and give them time to respond. Don't be too persuasive. And we'll be doing an event on that, Niban, and you can learn that. We are really out of time, but two more questions. Jyoti, how and what would be the best way and time to pitch to you both to invest in my startup idea? So Jyoti, go to startupgamechanger.com, and there is a link on the top right hand corner to apply to pitch to us. We do a pitching event every Monday evening Pacific Coast time, which is Tuesday morning India time. Generally I consider 5 companies to pitch to me and my group of investors every month. So come in the line. It is an exhaustive application process. Please fill that out. Don't send me the email, your pitch deck via email, because again, I'm not going to check it out or open it. Kajal is saying, what are the key elements investor look in a successful pitch? Kajal, it looks like you joined late. The recording of this, LinkedIn Live event will be available on our LinkedIn page. Check it out. Very simple. Your pitch deck should have the problem, solution, market opportunity, business model, traction, team, and the ask and the use of funds. So these are the important slides. There is another guy called Guy Kawasaki. He is a famous for his 10-slide pitch deck. Search him on the internet, and you should be able to check it out. Jerry was also mentioning about Airbnb. Look at their pitch deck. It is available on the internet. Check it out. Last question, Akash. How can entrepreneurs explain the long-term vision of the company to investors? Long-term vision.
Long-term vision, we have to understand the short-term vision before we can even look at the long-term vision. And I think it depends on the individual. Like as Anshuman knows, the partner on the fund that I'm the venture capital firm I'm with now is renowned as a futurist. He sees long-term vision, but it has to be something that makes sense now because an investor is looking at a 3 to 5 year term. So it depends on what you're defining as a long-term vision. If your long-term vision is 7, 10 years down the road or beyond that, we're not interested in that. We're interested in what you can deliver in 3 to 5 years, because that's when we want our ROI and exit, or what is ideal. But the long-term vision, you just pitch it just like everything we've talked about. I mean, it's, if you can tell us the problem and solution and articulate all the other components that we talked about, that should be able to just tell us your long-term vision. And again, if it is a problem worth addressing and a large enough problem, investors should be able to get it. And if they don't get your long-term vision, you move on to the next investor.
Yeah.
But just, yeah.
Just to add on top of that, Akash, two things. It also depends on the industry. If you are in med devices, you are in med tech, those are long term.
Yes,
But
yes.
the gestation period itself is 7 years, and you may need $20 million to take it through the 7 years and all the lab testing and getting the approvals, certifications from FDA and whatnot. But for SaaS, for technology led, for product, for services company, long-term vision need to be shown through short-term results, what you have achieved so far. And then if you can connect that, hey, in the last 6 months, we have gained this traction just by reaching out to 5,000 customers, out of which 4,000 became our customers. And, my revenue is this. The total addressable market is 1 million customers. Think of it. And, it will take us 18 months to. But, if your long term is really 5 years out, angel investors are not interested in that.
Yeah. Yep.
So with that, I would like to close this LinkedIn Live. Our LinkedIn Live calendar is on our website, and follow us on the pages that we are out there on. And thank you so much, Jerry, for giving us time. All my guests are pro bono. They are experts in that field, and this is why I get them. Thank you so much, Jerry, for your time this Tuesday morning.
Well, thank you all. Thank you for having me, Anshuman.
Yeah.
Always a pleasure.
Take care. Bye-bye.
Thanks all.